Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 17th, 2013 edition of Market Outlook. So, first thing, make sure you sign up for our weekly survey of investor sentiment, and we'll be sure to send you the results. And our survey is a little bit different. We have a shorter term horizon of trader sentiment, so it gives you an indication of some of the short-term potential short-term moves. So don't forget to register, sign up, and participate in the survey. So first thing, let's take a look at Herbalife, the feature story in the text version of Market Outlook. As you can see, it's this pissing contest between Carl Icahn and William Ackerman from Pershing Square Capital has been playing out in the most interesting fashion. As you know, HLF or Herbalife sells herbal supplements and has been featured in Ackerman's research as a Ponzi scheme. So let's take a look at the charts and see what's playing out. Well, first of all, you can see the market, HLF has been trading as high as 70 last May, took quite the tumble through this 200-day moving average, and then sort of stabilized. In December, Ackerman disclosed his research that HLF, which has been in existence for over 30 years, quickly plunged from a price of around 46, 47, all the way to 25 before other people started circling, aka Carl Icahn, and has bought up quite a number of shares of the stock, almost 13% of the float. When that was disclosed this week, the stock has promptly jumped. By the end of the day, it was only up 80 cents, but it's moved up from a low of 25 to as high as 46, and you can see there is this war going on between these two players. So it'll be interesting to see how it plays out. But interestingly enough, you can see we opened up right against that 200-day moving average, sold off, contained through that 50. So what will be interesting to see if a true short squeeze develops where fundamentals have almost no meaning whatsoever. This is pure supply and demand and old-fashioned tape reading. So what we really want to do is, from when the announcement of Ackerman that he thought that this company was a Ponzi scheme was right around that 46th level. And that also coincides now with that 200-day moving average. So one of the things, if you want to play this game, and it's going to be pretty damn wild, where you can just watch the machinations from the sidelines, that 200-day moving average is certainly a important level. Meanwhile, we're bounded by that move down to 25, up to 46, but more importantly is watching this price action unfold, because it's pure supply and demand and trading. So let's watch how this unfolds, and it's anything can happen. Total flexibility here, but clearly getting above that 46 level is going to be quite interesting. It would mean that there is a massive short squeeze going on. Remember, it started upon the announcement by Ackerman that he thought that the scheme behind HLF's whole business strategy is really a Ponzi scheme. And if we take out those levels, it would mean that anyone who has traded on the short side since December is now trapped. So that's something to keep an eye on. All right, let's take a look at the Dow. As you can see, we have been sort of grinding our way up according to bespoke research. The range of the Dow over the last 13 trading days is some of the narrowest it's been in almost 20 years or more. So the last 13 trading days, very, very narrow. We've grinded our way up. Volume has been relatively light, but nonetheless, we have not been able to really mount any type of sell off. So we've had literally 7 consecutive up weeks. Now, what's interesting, the price action here, neither overbought nor oversold. So we have plenty of room to continue to move either way, but the trend is clearly up and there is no signs of any abating. If we drop this parallel here, you can see, let's take a look at this channel here. You can see we're basically trading above the upper end of the channel. We really want to make sure that we're trading above the lower end of this consolidation or this really low volatility period. So anywhere under 138 might give us a little pause that we're going to attack the 50-day moving average down to 135. But nonetheless, the overall trend is still intact. Looking a little bit further out on the weekly charts, you can see again we're just working off an overbought condition on the weeklies, but still now trading above this weekly channel and still overall intact. So you can see on a closing basis we've actually accelerated. I'm going to put this channel line in here. We've actually accelerated to the outside of the channel, and now that should become a support level around this level here, which is just a couple points right around that 137.50 to 138 level in the Dow. Okay, taking a look at volatility. VIX.X, the volatility index, you can see that in the Bollinger Bands, even though we've dropped down to pretty much the lowest it's been in quite some time, even going back, let's go back several years here. You can see we're trading at the bottom end of the range for the last 5 to 7 years. But on a shorter term basis, we're not at the lower end of the Bollinger Channel here, which would indeed indicate irrational exuberance. So overall, we're still in a very bullish mode, clearly under the 50-day moving average, under the 200-day, and no sign of any exuberance to indicate a sell signal whatsoever. Looking at the market internals, here we have the McClellan oscillator smack dab right in the middle. So when we talk about the market not being overbought, you can see we've actually worked off an overbought reading by continuing to move higher, and now basically in a completely neutral zone. So when we talk about the market still having plenty of room to the upside, based on market internals, it's still very, very much in the cards. On a shorter term basis, same type of scenario. We did turn down a little bit on advanced decline, so the breadth is weakening a little bit, but remember, we like to see the breadth and volume. Volume, the bottom chart here, on a shorter term basis, basically neither overbought nor oversold, and so we really don't have advanced declines in volume confirming in any way. So basically this is sort of a neutral reading as well. So market internals, not overbought. So even though we've had this sustained rally, no indication of too much frothiness at this point in time. Okay, let's move to gold. Gold, you can see we've actually traded very nicely in this declining channel here. We almost touched it, not quite on the downside. This is a pretty good parallel channel. You can see we're about to get a death cross. Gold is definitely under pressure, but also hitting the lower end of its channel. So you're on a price basis. Interestingly enough, you had a this huge sell-off on Friday, attacked close to the bottom of the channel, and also potentially oversold. So maybe a little bit more weakness. Maybe we'll find some strength here at the bottom of the channel, but would definitely be looking for some reversal pattern. This thing has sold off quite a bit. We were trading just in the beginning of February around the 163 level. We're now down to the 155. So that's a good, $80 to $100 move in gold, and that's a pretty decent sized move. Remember, we still have a lot of money floating around the world. Now, on the weekly chart, this is where it gets a little bit interesting, because you can see that the important support line here also coincides pretty closely to that downward sloping channel on the daily chart. So this should offer some level of support. So not expecting too much more immediate weakness. That doesn't mean it can't fall through and possibly test this trend line right here. But I would expect, considering that we are that oversold on a RSI basis, we should find some support around that 152 level, which coincides both on the daily and on this weekly chart. So interesting potential setup forming. Now, also of interest, you can see that the long-term trend line that was broken and the return move, basically that play is still intact. So the return move, or the throwback after the breakdown to this trend line, held this intact, market under pressure. So the best we can say right now is that gold, obviously in this downward channel, getting a little bit ahead of itself, looking for it to find some support not too far from here, but that doesn't mean that it will hold. But I would not be surprised to see a temporary bounce and then another rollover as well. Let's take a look at bonds, because bonds also setting up in a similar way, breaking a long-term downtrend. Let's take a look at the a long-term downtrend in rates, and obviously uptrend in prices, because they moved inversely. So interestingly, you can see we've been trading under the 65-week moving average, and continuing to weaken. More importantly, that slope that was so strongly pointed up through this last year has been now starting to flatten out and roll over. Now, a little bit different than the channel in gold, we still have another thrust potential down to the 112 level in the TLTs. So as long as we staying beneath this channel line right here and this critical resistance, which is around the 118 level, which coincides with this huge spike day here, 118 takes out the trend line, would also take out this spike day, which is a pivotal day. We've actually traded inside of it. So a move down through it would basically suggest a test of the bottom of the channel. So rates definitely on an upward, rates definitely inclining, bond prices declining. We've had that death cross right here where the 50-day moving average was broken. That was in the beginning of the year, which we had pointed out. Obviously, we've been fairly negative on bonds for quite a bit of time, and this is just confirming additional weakness. Now, obviously, this is also accelerating to the downside. So this 50-day moving average definitely confirming to the downside. Let's one last thing here. Let's take a look at silver. And you can see silver also on a weekly basis below that 65-week moving average. which was around the 30 level. We closed convincingly down. We had two strong days. Interestingly enough, the 65-week moving average also pointing to the downside, sloping down. The 50-day moving average on the daily chart accelerating to the downside. Metals, precious metals, clearly under pressure. So when we talk about a paradigm shift, some large, longer term trends seem to be under pressure and potentially turning the corner where gold and silver and the longer term trend, the uptrend, definitely no longer intact, and it's questionable as to where we're going to find support. So we have an interesting shift. Look at that along, with interest rates and the strength of the market, the equities market. Clearly, a major shift going on across the board. Okay, that's it for now. Let's make sure we stay on top of these things. Watch how this HLF plays out, because it's an interesting study in supply and demand and market dynamics. Thanks and bye for now. This is Keith Schneider, CEO of MarketGauge.com, and see you next week.